Sobering news for China, with the latest figures revealing the cost of living is going up. Inflation soared nearly 5%, increasing at its fastest pace since 2012. A key factor is African swine fever, which has doubled pork prices. Now, that's a problem because demand for pork will remain high heading into Chinese New Year. And the news isn't any better for producers. The prices they receive for manufactured goods has declined for a fifth month in a row, down 1.4%. The ongoing trade war with the U.S. continues to add to China's growing economic woes. Now, cautious trading for investors following the news, with mainland stocks seeing losses in morning trade before both the Shanghai Composite and Shenzhen ended flat. So what does this all mean now? Martin Rasmussen from the China Economist from Capital Economics has the answers. He's going to break it down for us. Okay, Martin, so let's start with the inflation figure. So what does this actually mean for ongoing efforts to maintain economic growth?
Well, so I think there are two ways to look at this. The more optimistic one is that the policymakers still have more room to ease monetary policy. So if you look at the headline inflation figures, that would tend to suggest that the economy is overheating. But what we're actually seeing, if we look at core inflation figures, and if we look at non-food consumer price, and also if we look at producer prices, the key message is that the economy is not really picking up. So they have more space to ease monetary policy. But the flip side of that as well is that the current ongoing monetary easing hasn't really been pushing the economy to grow faster.
Right. Okay, but then does it actually mean that the situation is as dire? Because, you know, the reason for the inflation going up is actually, some people are saying it's because of really the pork prices here.
Right. So the main driver of the massive increase in inflation that we've seen recently is just the pork prices. So we've seen pork prices more than double in the past year. But one interesting development, though, is that last month, for the first time in over a year, we saw China's pork herd increase. So that suggests that perhaps the pressure from pork prices could be easing in the coming months. And actually last month, if we look at the month-over-month increase in the food prices, there's actually much less steep than in the prior month. So there's some positive indicators that authorities are finally getting a handle on this African swine fever.
Right. Well, okay, let's look at the declining producer prices. Now, is this more of an indication of waning global versus domestic supply and demand?
So I think it's hard to say specifically, but the way that we look at producer price inflation, when we try to go and predict it, we tend to look at metals prices, which correlate very well with producer prices. Perhaps as a result of that, this is a very volatile component of the prices that producers face, especially industrial firms. But if we go, so that the metals price is driven both by domestic factors, also by domestic, but Chinese demand is a big driver of the global metals prices. But looking further ahead, when we think about producer prices, we do look at the Chinese domestic economy, how it's doing, and we don't see that staging a strong rebound anytime soon.
Okay, so what's the outlook for December then?
So for December, we think that, like I mentioned before, it seems that authorities have been getting a hold on the pork, on the African swine fever. So we do think that the drag from the pushing up of inflation figures from the pork prices will ease somewhat. And when you look at the producer price side, we think that the year-over-year growth in producer prices will ease somewhat, even though it's not going to strengthen that much month-to-month terms, according to what we think.
Thank you so much for breaking the numbers down for us. Martin Rasmussen from Capital Economics.
Thanks.